The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, Basil Chapman here. This is the Tiger Technicians Hour on this Monday, the 22nd of September. I had a question I forgot to answer on Friday about IBM. And you remember, it was a long time ago, I said IBM is going to be like Microsoft and all those stocks from the year 2000 that morphed into something that you would never expect. Adobe, all of those stocks. And IBM finally, when it was starting to make its low back in 2023, look what it's done. It's gone from the 120 or 118 area all the way to where it is now, up 269 at up 269 at 269. So what we're looking at is it's really changed its character. It's now in the sweet spot. It's no more what we can consider a laggard, an old fogey, a kind of a dinosaur. It's really changed its characteristic in terms of its business in contemporary terms. So I think this is very nice. I've liked it for a long time. We don't have it. I've just found that I'm trying to get out the portfolio, and it's been working for a little while now, just to be as current as possible. And I found that just for my own satisfaction, that's the one that's working very nicely. I mean, there are stocks like an IBM, like a CVS even. Look, and I spoke about this for ages, doing really nicely now. CVS went, look at this, the doldrums, all the way through 2022, then 2023, and then down to 2024. I think it was November. Yeah, November it goes down to, it was December. December goes to 43.56, and now it's trading at 74. So I just wanted to do that, just to cover some things, because I had it already and then completely forgot about it. So I don't know how long I'll stay in this particular phase, but I'll go through some things, and there are some questions that have come up, and we'll go through them. But let me just go to the market. So the Dow right now is under the all-time high of 46,396 made on Friday. It pulled back. This could be a leg D going to a peak D today because it'll make a lower high. And within the context of this trend line here, I've done it here, the page that I send to my subscribers every day. Look, this shows you the white charts right here. This is the daily 120-minute chart of the Dow. And it shows you the inside track repellent zone. We're right there. And for 3 days, I was saying, hey, inside track repellent zone, until we break above the green line, we've got to consider that is going to be some kind of a barrier. Not only that, if we go to this chart right here, look, if you go to this chart right here, there's the Dow. Look at this cluster of resistance, Chapman Wave automated resistance levels. Look at the S&P. Slightly different chart because it's a little more empty, but it still has 6706.98 as a resistance area. Here we are at 66.63, and look at the QQQ. And this is a daily chart. The black notation is the resistance levels. This is called Chapman Wave projections. Late Herb Brun set this up for me, about maybe 10 years ago, maybe more. And the red is the support levels. Now, I use other things in the Chapman Wave. I actually don't go to these things very often. I just like it when there's a cluster to show that there's a potential resistance area. And look how each one has stalled the rally. Each one. Look at that. Even that 585 level, and then now we've got 599. So we're watching this closely with the QQ. Look at the IWM. The IWM, the Russell 2000, down unchanged right now, 242.96. 247 is a resistance there, 243, 247. And it just stalls, and that's really important to note. Look at what happens if there's nothing above. Look, nothing above gold. Gold is up 50 at 37.56. Silver had 42.70. Now there's nothing, and it's at 43.91. Look at, where are we going to go to? Let's go to high-grade copper. High-grade copper. Oh, well, this is the chart that's 4.65. The resistance is at 4.61 right now, down a penny. Let's go to use this again for bonds. Look at that. Bonds look at that resistance in the 118.69. Remember, this goes in decimals, and 118.15, and here we're at 116 and 7/30 seconds. So I like to use this just as a kind of, I showed my subscribers when I did my hour, was maybe an hour and a quarter, maybe more, webinar. It wasn't a webinar, it was a video on Friday, but it's like a webinar because I go so thoroughly in the technique that's being used, etc., and the projections. So with that said, let me just go to this particular chart right now. On Friday, I did it the previous Friday, but I didn't do anything this Friday. I had said 2 Fridays ago, that's just a week ago, that I think this is an internal high and that we might be getting to a residual high. I'll follow this up with a Chapman Wave Dark News cloud cover, and that pertains to, in this case, maybe it is the next week when we get the government funding. But in the meantime, there's nothing that I can hang my hat on right now to say, well, that's the thing. That's the dark news cloud cover that we're going to get that really turns this market down. So with that said, we've covered a chunk of things, and I want to do one other thing. Look, I want you to show you Bitcoin. Look, here's Bitcoin pulling back. I always do that. I forget. Go from the yellow chart to the white chart. There you go. There. Bitcoin. Down 1935 at 113,350. And I'm mentioning for quite some time now that I think that Bitcoin is still looking good overall, but it's just been, since mid-August, it's been in this digestive phase, gone from 125,200 all-time high down to the 108,000 support level. It's just stalled. That's the most important thing to think about. I don't think it's really turned down vociferously. I think it's just stalled at this particular point. Okay, now, Ethereum I was asked about. Here we go. Ethereum, and as I said, it's kind of following, but it's leading in a way. It's been much better. But now I think it's gone underneath the rectangle support. It's down 220 at 39.59. Now it too is stuck in this range. So, okay, Ethereum, 39.59. The support was at 40, just on 40, and now it's under it. So you've got to be careful. All right, questions that have come in. Let me see. Oh, I forgot to look down at my page. I've got BSX, Boston Scientific. Now, what I wanted to show is this. This is really interesting. So let's just imagine we're here. And I'm talking about this, and I'm saying, Boston Scientific, a fantastic company, medical instruments, just always doing some cutting edge work, done well. Some of the others in the area, like MDT, Medtronic, also done pretty well, doing quite nicely. Peak C, D, E, F. There's in a peak F right now if there's no new high. And the weekly chart, look at this potential double top. The last major top was Medtronic's MDT was at 96.25. Another one is Agilent. There's another one that we kind of put in the same area, Scientific Solutions for Labs and Businesses kind of story. But all of it, what I wanted to show as we're going to the break is have a look at this chart for Boston Scientific. Look how quickly it's gone from 109 to 96, almost straight down. That's the speed that things can change. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Folks, we're back, and I have to go through this because it's really important. Just a couple of things that we wanted to look at here. So the questions came. Now, it's interesting that we haven't had a ton of gold questions, gold and silver stock questions. Now, if we had, when we used to have the call in, that's how we often tested to see whether or not we're getting overbought in a particular area. But the surprise factor to me in the whole gold and silver, the look of the charts themselves, is that there's a steadiness to this. It's not like it's wild. It's just, it's hard to believe. But look, yes, it's gone up very sharply, but this is not a parabolic move. A parabolic move would have, doesn't matter what the price is, but you would see this huge green candle followed by another green candle. The third green candle is the one that could go very much higher and then pull back and give you a kind of candle with a long shadow, a long wick as it reverses down. And that could be in October. I'm just looking at I'm not talking about anything about fundamentals or even technicals. I'm just saying on a visual basis, this huge candle, that's how you get breakouts. Look at this, what happened back in 2020. Big green candle, but that was a takeoff candle. Then you got smallish greens. Then you got a very big candle, the intra-month that was in August. Yeah, August of 2020. Intra-month, it looked great. I remember at the time, and then it started to pull back. But that's nothing like what we're seeing here. So in numbers, it's parabolic. In the visuals, because it's filled itself so nicely. Look at this, almost a Mariposa candle from last month. No wicks. There was a tiny wick, but it's basically no wicks. And this month, it's almost the same. But the month is not even close to being finished. We've got until the 31st. We've got, what is it, Tuesday a week? Let me just double check here. Incidentally, today, let me just wish all our Jewish listeners to TFNN, very happy and happy and a very healthy New Year, and a peaceful. Let's hope for a peaceful New Year. Let's go to October. So that's Tuesday. A week from tomorrow, anything can happen, right? But in the meantime, what I'm saying is just let's the look that says this is now a multi-bar correction that's coming up. I don't see that at this particular point, but I can see it if, in fact, at any stage from here, the GDX, the gold miners, trading at 73, up 63 cents at a high. If it turns around, it doesn't matter whether there's a higher candle next month or not, but if this month's low, which is at 60th, the lowest 63 something, I think. Yeah, 63.20. If that's taken out at any time in the next 6 weeks, then I think you're going to start looking at gold and silver doing something very different to what we've seen over the last couple of months. And that's the only way I can see it right now. I don't see it on a fundamental level, because whatever has been having the countries and huge institutions buying gold, that just hasn't stopped yet. And look at the silver now, look at that. That broke out of the resistance that I put in, left side, right side price time match. We're already 2 months late, 3 months late than the price I was looking at, and that price was this high that was here, October of 2012, and then the next left side high is at 45.80. That's for the continuous contract of silver. So a lot of things are going on. And a question came in here. PDYN. I was in too early, but looking at that chart, I'm happy to be there. Basil, to my PDYN, looks like your kind of chart. Daily trough E, 914 positive, cross, stochastic and MACD working, leg B in process, AI software for robotics. Okay, let's just go there. I'm going to go there right now. Here we go. So AI, what am I looking at? PDYN, right? We did look at this some time ago. I know I've got it notated. Yeah, this is in a leg B right now, daily, a peak C and a peak C. Now, one of the things I need to talk about in a chart like this, Paladine AI, have a look at this weekly chart. You see what happened when it had that huge peak F that was way underneath the 200-period moving average, and that was in January, I think it was January of 2025 this year. And then look what happened. It made a cup formation, and that cup then stalled. I don't like that. That's number one. Number two is, you see the way the MACD reversed down? You see the way the histogram is still red? You see the gray? This is the retro strength index. Look at the blue on balance volume, still very good. Stochastic's gone to a bottom and has turned around, but it's still only at 14%. So there's work to be done. And what I'm looking at is when a chart fails like it did, below the previous high, it goes to a C and then goes back more than 50%. There's a lot of work to be done. So what you need to see, this is the weekly chart. So the chart itself is saying that you've got one cup formation that failed because it went underneath, it failed underneath the previous high. Now you're attempting to make a second one. This one, let me just show you something here. The MACD went lower than the previous one. The stochastic went lower than the previous one. So there's a lot of work to be done. And I'm just going to think that it's a slow move to the upside. It needs stories. It needs to be pampered. And I don't see any pampering right now. But I do see the last week of action in the daily chart especially is good. So this is what I'd be looking at. You see this candle right here? First of all, the candle with a high of on the 6th of August, which is at 877, and we're at 844 right now. It did hit 853. Look at this. The high that was made on the 5th is 8.99. Let's call it $9. So to get to $9, I do not want to see 820 to 816 breached, and it's at 845 right now. In the next 2 days, it has not to pull back, but it has to go higher than it is at 853 this morning, pull back a little bit. It has to go high. Why? Because this gap has been filled a couple of times, but the most important thing is this red candle. Anyone who was buying there, they're waiting for that candle to be reached. So you want the high of 877 to be tagged, not for 10 minutes, but almost on a closing basis. If you get that, then the next step will be, it can even pull back after that, but then you can see this tag right here at the 899 level, going to the 9s. If this week, any day this week, PDYN trades for, I'd say, a majority of the day, let's call it for 5 hours, above 9.10, I think you've raised the base. That's what you need to see. And then by the end of the week, you might get a green 9-period exponential moving average. But there's a lot of work to be done. All right, next question is, so the next question was, okay. So question came in, Basil, what's happening to our, I ran. Whoa, this is trading at 42.23. We bought it at 22 just a couple of weeks ago. This is very nice. I'll be back in a moment. IREN is the symbol, up 362. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Just let me show you. This is the This is the E-mini, 10-minute chart. Went to peak E at about 4 o'clock at the close on Friday. Then it comes down. And then from about the 65, 95 area, goes peak A, pulls back, goes A, B under it, A, B, C under it, and goes to D, and now it's in a leg E. Why did I put an F? It should be an E. Leg E. At the intraday high. Isn't it amazing? And I had this feeling over the weekend that we're getting closer to what I call the dark news cloud cover, whole thing with the funding the government, etc. And then I said, no, don't do that. Last night I said, even into the morning, I said, no, you're not looking at any short side. You're staying on the long side. So, and fortunately, you got to do the technical work and don't get your emotions. And I tried my best not to get the emotions caught up here. And so far, thank goodness, I've stuck to the technicals. So this is the 5-minute chart, leg E. Look at the way the green 9-period moving average flipped positive at about just 9 o'clock, and it's still positive, and it's gone from the 67.03 area to where we are at 67.42. All right. So let me just go back. A question came in. So, Beckett, BAKKT shares surge in pre-market after appointing Iran. I still haven't figured out how to say it. I practiced over the weekend, but it just doesn't come out. It's IREN, Mike Alfred to the board. So I don't know if that's really the reason why the stock is surging. Look at this. It's up 3.25 points. Wow. As I said, look, we were along, fortunately, from there. I don't know what to say. Iran doubles GPU fleet and raises ARR target to 500 million after historic surge in share price. Personally, I don't know what it means. All I know is that I love reading about this particular stock before. Then I said it's got to be on our list. It's Iris Energy, former Iris Energy Limited, next generation data centers, renewable energy, and GPUs. It just seemed to fit everything, but I love the technical action when it did this little cluster formation breakout from that cup formation at 21.54 back in July and pulls back to 14. Then it just starts to, it takes it out, and we waited for that, and then we got in at right there. So as far as I can tell, it's 2280. Okay, so all I can say is that I'm watching it in dazzled amazement, and it's looking very good. I can't tell you anything. I can tell you, be careful, because when these give back, if it's based on just kind of news, flab, just stuff that's just out there, then it can give back, and it can go back to 36 to 34 very quickly. But so far, it's doing very well. Next question came in about IWM. Yes, I did answer the question, but the market didn't do that. And the question was from WH was, Basil, missed first half of the show. If you didn't cover yet, I don't think you answered my question on my question recently about when to add to IWM. So what I had said when we were over there in the 230s, I had said I would wait for the 232 is where, if it takes that out, then watch the 226 area. And that's where I'd consider a safer entry. Instead, what it did, it ran all the way up, IWM, iShares Russell 2000 ETF, and here it is, down today, 71 cents. Now, what I'd also say to you is, I didn't know whether you were still in the aggressive TNA, because it's just a completely different mental and physical aspect to the TNA, 3 times long, because it moves so quickly. So if you are still in that, remember I had a different reasoning, and what I said is the IWM, because it's 1-to-1, is slower moving. Well, the chart does the same thing, but the actual 3 times the multiplication is really big when you're in it. But what I would say is, now I'm anticipating from everything I'm looking at, and the fact that many of the stocks, like a GE, this is not IWM, this is just generally in the market itself, have gone to all-time highs. We're still long GE, it's at 297 down almost 4. All-time high on Friday was 303.03. Robinhood, these are all telling me that we are extended. We're not extended to the extent that you say, oh my God, this is just, you've got to take some money off. You're extended to the aspect that the risk of a pullback and a good percentage pullback is starting to increase. So the IWM is in that category, only in that it's just had a very steady move. It's gone from a low at 170 to 242. I would say that is a pretty decent. But more important, look what it's done in the long term. Look, 244.46 was the high back in November of 2021. It does a double bottom. That's that Chapman wave technique that we use. And it went down to the 161.47 level in October of 2023. And then I spoke about this we did have this at this low, but then we took our money out, and we've just watched it since then because we wanted to put that money into other areas that I thought were moving quicker. That's all. So what does it do? It goes right back to 244. It goes to 244.90 in November of 2025. I would say that that's 4 years exactly. And then what does it do? It doesn't just make a little cup and a tiny handle. It plummets down. It goes down to that 170 level, and now it's gone back where? It goes back to 245.57. So not even a point higher than the last high. And that's where, under every circumstance, this is where I look at, and it's only an A, leg A. I look and I say, wow, for me, the risk is that it makes some kind of a triple top, and then it pulls back, and it doesn't use up much points, but it does use up some time. So that's what I've been looking at, and I was wrong. What it did is it went all the way back, and it went to a new high. I've got this. There's no other way I can count it as a peak C if there's no new high today. There should be one tag of the 245.58 level, 1 penny above the previous high to give a D, or it could fail just underneath to give that technique that I call peak C1, C2. Then I'll be happy and say, okay, now we can have the pullback. It's not done that. So I know it's frustrating, but you shouldn't be frustrated because you're in this. You've done very well. And it was you, WH, you're the one that chose the moment to get in, and you've been holding long, and you've done very nicely. I'm just saying to you, I don't know whether you're in 3 times long or 1 time long. If you're in the IWM, when I get back, I'll just give a quick, brief summation of what I think I would do personally in your situation since you asked me. Other than that, I just say you're the boss because you did it and you've done well. I'll be back. Dow is down 40.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back. So the question is, where do I add to my, I think you did say IWM, so that's very specific. It's not TNA, it's IWM. And I would say because it's 1-to-1, everything about what I'm looking at here says now there's an opportunity to start looking at areas that are giving us clues to say that the upside's becoming somewhat limited, and areas that are saying, hey, limited, schmimited, I'm just moving up. And I'm saying that as I look at it right now, the IWM has been very steady. So if you are prepared to put a stop in it, because this is, the risk here is that from 242, it can go to 246, maybe 247. So that's 5 points. So does that mean that 5 points down, going to the even 237 area, that's a very different chart pattern. If it goes 5 points down from here, that would suggest that there's tremendous resistance in the 240s. So I would say to you, you could just start a small position, an added position, right here at 242, but I would insist, if you're listening to me, if you're doing it yourself, that's different. But you ask my opinion. My opinion is that I think we could still go just a fraction higher to 245, maybe 60. But then you've got to be careful going into the end of the month, as well as other things that I'm looking at that are just suggesting that the market is becoming a little bit overbought for just purely Chapman wave technical reasons. That doesn't mean to say you couldn't go higher, but it means that I just need to be careful. So start a little position, and this position, I would give it a 3-point stop. And I'm comfortable saying that to you, only because we're in such a strange market in the sense that the rhythm, the cycles, the moon dates, everything that I would, the measured moves for numbers that I'm using, there's just buying that keeps coming in. And I don't want you to miss out, but you're already in it. So I'm just saying this is going to give you a good sense of whether to stay in or not. So if you're in now at 242.33, I would have a 239.50 stop. But if it goes to 245.57, this position, I would actually raise the stop to the entry price and just leave it. I wouldn't add to it because you're in it. What I really want, and we will get it at some point, there's going to be a pullback. I want something where you're looking at risk reward says, wow, now I've got 3 or 5 or 6 or 7% below before, so I'm actually in the green 7%, or that's not on paper, it's in my mind. And then when I get in, I'm fresh and I'm looking at a brand new move in the weekly chart to go higher, and for the monthly chart to make that V-shaped pattern and forget about the double top at 244, but to think, 252, now we've made that whole 244 area the support. That's my thinking. All right? I don't know what else to say to you because I'm looking at risk reward. Right. Okay. Next thing is, well, where did we go? Oh, yes. So within the context of the different sectors, what about the IYT? So the IYT is doing much better now, but it's not great. It's doing better. It's just started a decent move, leg A, and it's almost like a cup formation after making that Chapman wave H pattern. So let me draw this in. And I want to see whatever happens to the overall market, it doesn't matter. By the second week of October, I really want to see the IYT, the iShares Transportation Average ETF, not testing the 68 area or 65, but actually going into the 73 and then 74 area. In other words, going towards the 75, was it 75? Well, let me just open this up. Because I want to see the transports. This is like Dow transportation theory. So this is what I want. I want to see the 75.59 all-time high of November of 2024 taken out decisively. I want to see a nice leg B start above 73.26. That was the high of July. And that says to me, nice, it's working its way. This is another kind of funny cup and handle with a V-shaped extension. A lot going on, but I don't see anything in the IWT to say, be very careful. I will. If this is seasonal double top here, so if this particular rally that we're looking at right now, 37 cents, was that Federal Express or UPS? UPS? Wasn't UPS. Federal Express? Was Federal Express. So IYT. Anyway, that's what I would like to see, and that would say nice rotation going to the different sectors. Then I was looking at, so the question came in about XHB. XHB, have I got that all notated? Yep. This is the home builders. Very nice rally, went to E and it went to an F. Right there, peak E and an F. All right, now we've got this pullback. Okay, right there. And at 110.85, it's down 217. And that's the reason why I made a big deal last week about the yields. And I said, the way I'm looking at it, you've had a 40-year bull market in yields. In other words, in the bonds. And the yields have come down. And all of a sudden, you've got this 3-year or so consolidation. Everyone thinks this is enough, and they'll be going back to 1%. Not everyone. A lot of people are talking about that. And I'm saying that's a very big expectation. If the overall economy is doing well, you should see the TLT. You should see demand for the TLT, so that yields actually go up. I mean, isn't that the way it always worked? It used to work. And the TLT's made a peak D. Leg D in the weekly, it could be a peak D, a peak F in the daily chart. And the iShares Treasury Bond ETF monthly chart, lowercase h goes to lowercase m and then makes another one. It's not a bullish chart at all in terms of the TLT rallying. So it's going to have to prove itself. It's at 88.77 right now. You want to see those. You want to see 92 if you're really talking about a major turn down. Look at this, the TBT. This is the yield. Was going very nicely in the arch formation. And I said, well, let's see if this is going to hold. And in fact, we've run up from the 32.76 area. So, 3.276. Yeah, we are at 3.45. So you've got to keep that in mind. Right? And that, to me, is also part of what we're looking at in the overall market. Now, there are a couple of things that, just real quick, Tesla, there we go. Tesla's trading at, a new recovery high. This is outside. Can you imagine? I listened to Ron Barron being interviewed when Tesla was, I don't know where it was, but it was not doing well. It was in this, Was it the slow down to June? It was in the summer, early summer. And Tesla was looking horrible. And Ron Barrett, who has millions, he must breathe Tesla in and out. He doesn't breathe oxygen, it's Tesla. And he put money in way back. And he said, I'm putting even more money in. And I thought to myself, gee, this guy, fearless. But he wasn't fearless. He thought it through. And here it is. At 442.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
There's a question about Woozy Technologies. Is it technology? Woozy Core. The Woozy Core trading at 274, up 17 cents. Leg D in the daily chart, very nice. And the stochastic hasn't quite made 80% to 75%. This is very good action, making 260 to 255 support. Weekly chart, it's like the one we looked at a little earlier on for Dan. What was that one? That's P9. Yeah, P9. So this is VUZI. This is very nice action, but that weekly chart says it's stuck in that range. So you want to see 310. It has a little different connotation to the other one that we were looking at. 310. It just has to tag it. It doesn't have to hold there. It just needs to spike up. Why? Because if it does that 9-period moving average, which just as we're speaking is flipping to green, got the whole week to go to see if it holds that. It'll help it. And the weekly chart a monthly chart is just terrible. So that's a little different. Now, TGB was the other one. We've looked at this very often. We've had it every once in a while. There it is, up 2 cents at 378. And this is Taseko Mines Limited, leg F could be a brand new leg B in the weekly chart, a monthly chart, leg D in the weekly. That's very nice action. Look at the way it's walking the 9-period moving average. Look at the way it's walking the 9-period moving average in the daily chart. TGB looking very good. 3.78 up 2 cents. I like it. It makes that whole area of 363 to 356. The two moving averages, really good support. But that's interesting because if you look at crude oil, HG, look at this. I'm going to move this over. So there. So, oops, I want to see. Look at that. Very choppy, but look. Each move up is a stair-step move. But wow, not a flat stair-step. This is like a hill. And then it makes just a slightly higher low. And then a much higher high. And then a slightly lower. So this is acting very, oh my, that's the end of the show. End of the show. Check out my opening call daily newsletter. We've had some really great positions. And let's see, as I say, I think Steve's back today. I hope Steve's back today. Great programming here. I'll be back tomorrow. And I'll be back tomorrow morning early, 8 o'clock.